Every halving will have a very large increase. The increase of the previous year was 109%. So what will be the increase in 1 year after the halving? Will the price definitely rise after the halving? Are there risks to the halving? Hello guys, I'm Kervin from Meta-Luban. Welcome to my channel. In this video, we will fully understand this Bitcoin halving from several major aspects. If you are in a situation where you don't know what kind of investment strategy you should make after the halving, including the current position of the currency price in this cycle, the choice of miners after the halving, and the significance of this halving to the entire cryptocurrencies market, please do not miss this video. On April 20th, 2024, Bitcoin will undergo its halving, an event that occurs every 4 years and slashes miner rewards. The reward will be reduced from 50 Bitcoins to 6.25 Bitcoins per block and will further shrink to 3.125 Bitcoins on April 20th, 2024. The reason why halving has received widespread attention is that multiple halvings in history are also closely related to the bull market cycle of the entire digital currency market. Bitcoin's inherent scarcity combined with the historic increase in demand following previous halving events has fueled a sense of digital rarity that could lead to potential upward pressure on the price. This mechanism of scarcity and the dwindling supply is part of Bitcoin's design and one of its characteristics as a form of digital gold. Every halving will have a very large increase. The increase of the previous year was 109%. So what will be the increase in 1 year after the halving? To know this answer, let's first explore this issue from the underlying logic. Will the price definitely rise after the halving? Are there risks to the halving? Bitcoin prices are affected by a variety of factors, including market demand, investor sentiment, global economic conditions, etc. So while the Bitcoin halving may have some impact, it is not the only factor that determines Bitcoin's price direction. For example, about 6 months after the first 3 halvings, the price of Bitcoin increased significantly. Although there is a historical correlation between halving events and the price of Bitcoin, it is important to remember that correlation does not imply causation. History will not necessarily repeat itself. The Bitcoin halving is generally regarded as a positive event, but there are inherent risks, especially in short term. Expectations of the halving may trigger speculative market behavior, leading to increased volatility. It is worth noting that if market expectations are not met, the price may temporarily adjust. For example, if Bitcoin's value is widely expected to surge immediately after the 2024 halving, then investors may buy Bitcoin before the halving event, thereby pushing up the current rather than post-halving price. This is also the reason why the implementation of negative news is good, and the implementation of good news is negative. So while a decrease in the rate at which new Bitcoins enter the market could theoretically indicate increased scarcity, which could in principle stimulate demand and potentially drive up prices, it is not an independent factor that can reliably predict or trigger a significant increase in Bitcoin's value. So after this halving, everyone found that the currency price did not rise with the increasing costs, but was very close to the cost of mining. So in addition to the drop in currency prices caused by the halving, what are the other reasons that lead to the drop in currency prices? Because the situation this time is completely different from the before, we need to switch our perspective and bring it into the global economy to look at the BTC halving. It is very unreliable to copy the previous halving data as a support for the decline in currency prices. So let's take a look at several factors that cause currency prices to fluctuate. The first one is the mining companies' selling pressure. Number one is North American mining companies, main listed companies, have sufficient cash flow. This selling pressure is not too much. And number two is mining companies supported by capital in Central Asia. They pursue low-cost operations and rely on the traditional mining payback cycle. Large-scale mining machine relocation is underway to optimize mining costs. This is the main source of selling pressure. The number 3 is mining companies supported by state agency, meaning aimed to participate in market competition and obtain early Bitcoin output. And their strategic significance is greater than profitability. Selling pressure here is not too big. Another point of selling pressure is Grayscale GBTC. Let's talk about it separately here. Grayscale's GBTC is the world's largest single institutional investors Bitcoin holdings, holding a total of 630,000 Bitcoins, accounting for 3% of total Bitcoin's issuance. GBTC holds a total of 630,000 Bitcoins and manage more than $16.8 billion in assets. So why is owning Grayscale selling after the ETF passes? The reason for this question goes back to why investors in the United States buy GBTC instead of holding BTC directly. Before the adoption of ETF, normally traditional investment institutions could not directly participate in cryptocurrency investment. But as long as you purchase GBTC, it is equivalent to indirectly investing in Bitcoin. GBTC is regulated by U.S. Security and Exchange Commission and is the earliest and the most reliable channel for investors to hold Bitcoin. GBTC can be traded through general securities accounts. The operation is simple, and it is more familiar to traditional investors than cryptocurrency exchanges. Withdrawing and depositing funds in a security firm is generally more convenient and cheaper than trading on a cryptocurrency exchange. And also, it is easy to store. There is no need to learn how to manage a cryptocurrency wallet or worry about any risks such as losing your private keys or having your wallet hacked. Therefore, American investors purchased a large number of Grayscale's GBTC at that time. There are actually more complicated reasons for this, which we will not describe in detail here. Then, when the ETF passed, the reason why Grayscale sold GBTC was very simple. Because for investors in the US stock market, GBTC is the altcoin in the US stock market. Being on the ETF is equivalent to being on the Binance of the US stock market. Therefore, in the current market situation, as long as everyone sees Grayscale's transferring BTC to the exchange, there will be a downward trend. But there is not only one ETF, so Grayscale selling is only one reason for the current downward trend in currency prices. And judging from the current market, the market is able to absorb this part of the selling pressure. Then there are some reasons that everyone may know. The main reasons can be summarized as 2 points. The first is the situation of the war. Under the war, any industry will be affected. The second is the expectation of interest rate cuts. After the U.S. first quarter GDP data came out, inflation rose for 3 consecutive months, and the interest rate cut expectations were delayed to December. It is worth noting that the big funds on Wall Street are more on the sidelines due to the slowdown in the pace of military and U.S. interest rate cuts. All large institutions and capital have actually completed their layout last year and are now waiting for the implementation of global market economic policies. In the range of the currency prices from $38,000 to $48,000, institutions have absorbed a large number of chips, and the cost of electricity after the halving is exactly $50,000. In fact, we have been told here that this price range is the bottom of this market. So from this point of view alone, BTC is still in a very low range in this bull market, which is the window period for entry. When the interest rate cut is implemented and the currency price reaches a high point, that is when we sell and leave the market. Let's take a look at what impact the halving will have on miners. Miners at this stage of the cycle must seriously consider the impact of the halving event on their operations and may need to adjust their mining investment strategies and mining equipment to adapt to the new market environment. After the halving, if the coin price remains at $65,000, the income of its 1995 terahash may just cover the electricity bill. Meta-Luban is currently developing the overseas mining market to obtain cheaper and safer site resources, hoping to allow more investors participate in the mining industry and achieve stable returns. Well, now miners know that mining has become very difficult now because we can only get half of the bitcoins before the halving as a reward, which has led to some mining equipment that is not cost-effective to be shut down, or miners to seek more efficient mining methods, such as turning to mining other digital currencies like KAS or BCH. Then this leads to a decline in the hash rate of the entire Bitcoin network. This situation will continue until the profits of mining become attractive again, and these miners will come back. So everyone should feel that in addition to gaming the market, we are also gaming human nature. At present, the price of BTC needs to remain above $60,000, otherwise the living environment of miners will be very bad. The price of BTC must be above $80,000 before miners can make good profits. To sum up, when Bitcoin is halved, the impact on miners is mainly reflected in the following aspects. The halving event causes the Bitcoin's quantity mined by miners to be reduced by half. So the Bitcoin reward they can receive from each block they mine is also reduced by half. This directly leads to a reduction in miners' mining income. Although Bitcoin prices may rise due to reduced supply, miners still need to pay the same cost, such as electricity, equipment, maintenance, to continue mining after the halving. Therefore, the halving event may increase the cost pressure on miners, especially for those with high costs. The halving event may cause some non-cost-effective miners to exit the market because they cannot afford the reduction in mining income. The halving may also incentivize more people to participate in Bitcoin mining because they believe that the price of Bitcoin will increase over time, thus offsetting the reduction in mining rewards caused by the halving. This may lead to the Bitcoin network's hash rate recovering or even increasing after the halving event, leading to the increased competition in the mining industry, especially in areas with relatively low electricity costs. The halving event may prompt miners to update their mining equipment to improve efficiency and reduce the costs. This may lead to more miners adopting more advanced mining equipment, thereby increasing technological competition in the market. The Bitcoin halving event can also be viewed as a market adjustment mechanism, making Bitcoin more similar to limited resources such as gold. At the same time, the halving event is also forcing miners to adopt more environmentally friendly and efficient mining methods, such as using renewable energy or using more advanced mining equipment. This helps reduce the environmental impact of Bitcoin mining, becoming more environment-friendly and green, while pushing the entire industry to develop in a more sustainable direction. In summary, the Bitcoin halving has a direct and an indirect impact on miners. Although the halving event may affect Bitcoin prices and mining activities in the short term, but in the long term, it is an important factor in the Bitcoin ecosystem and helps maintain its decentralization and robustness. Let's look back at the previous question: how do we do assets layout? Whether it is the current crisis of oil in the Middle East or the financial turmoil in the Asia-Pacific region, the essence is to drive funds to two places. One is gold and the other is US dollars. Gold naturally needs no explanation. The return of the US dollars is fully in line with the interests of the United States. Should we reduce our position now? In this moment, you should do the opposite and increase your position instead. Prioritize the allocation of assets priced in US dollars. In addition to purchasing some gold stocks, BTC may be the best option because in the event of the crisis, physical gold cannot be taken away at all and may even be turned over, and BTC is digital gold. As long as the global BTC mining network is not interrupted, the basic assets are safe and granted. There is a point of view use a war to stimulate everyone's awareness of the true value of BTC assets. Maybe it's not a bad thing for the industry. Do you agree with this view? You can leave your comment below. At the end of this video, I want to tell you that today's mining machines are gradually developing towards the direction of water cooling specialization and large hash rate. Ordinary investors have fewer and fewer opportunities to get inside of this industry. If there is a correction in currency prices, you can absorb some low-priced chips in time. And if you have good power resources or a suitable entry opportunity, you still need to seize it. We firmly believe that Bitcoin will reach a post-halving price of $100,000 to $150,000. Okay, I'm Kervin. That is all for today's video. Leave your predictions on the price increase after the halving in the comment area. So, see you next time. Bye.